Alright, guys. Good morning, good morning, good morning. It's a new week, and we it looks like we're gonna have a very productive week. So, that's a good. So, I want to do a quick analysis on Euro USD. For some days now, since Euro USD has been a little bit volatile since the inauguration of Trump. So, I find Euro USD quite interesting these days. So, I'm on the weekly time frame right now. So this is the weekly time frame. So we are kind of expecting, prior to the new week opening, which is the opening of the monthly candle, which is this is the new month, which is the first day of February. So we are actually expecting price to trade back into this area here, into this fair value gap, but price failed to go back there. We opened this week and gap down on indices. We really gapped down. On Nasdaq and US 30 we gapped down. You see the gap, but just that on currency is not that obvious. But just that we see we really move to the downside, invalidating the areas I set. So I was expecting it to trade back up to this inefficiency here for this week, but it didn't do that. So price just gapped down and invalidated the area I expected it to go to. So looking at this chart here, you see this was my initial drawn liquidity prior to the opening of the new month. Here, this other block wasn't on my mind. I was looking at this relative equal highs, this and this. This candle didn't take out this one, so it was considered a very relative equal highs for me, and I was paying attention to that level. So the market closed here. The market closed at this candle on Friday. So I was expecting maybe price to come into this inefficiency, into this invasion fair value gap, balance price range. There's a fair value gap here, a fair value gap here, a fair value gap here. So I was quite believing that price would trade back into that side and probably trade higher, take out this liquidity, or go up and trade into this inefficiency here. There's another block here, and there's the up close candle here, which I consider as another block or a proportion block. So price didn't do that. You just see the market just opened at 17 o'clock and moved down quickly. So this is what I'm now seeing in price action. So I have to think this way. So for this week, I'll be expecting. So this is now a consecutive close candle, which I consider an order block. So if you see how it's from the body of this candle or to the day, you see how the bodies are telling the story, the wicks are doing the damage. So first went up, rejected and closed below the order block, went up, closed below the order block, then we rejected. There's a inversion fair value gap here and a fair value gap here, so price traded back into this inefficiency here, then dropped and closed strong, a strong down close candle. I had a little doubt, but you have to wait and see what the market is offering you, which is what I'm seeing here right now. So this turtle soup here, I will have to remove it. It doesn't look like what I'm interested in anymore. So it looks like I'll be changing my bias to bearish for the week. So this is the um, the Monday's opening Monday opening price is at this place, so I will expect price to create a little bit range. Maybe if price close below, if Monday close below this 1 2 3, this candles, this area here, or even take out this low, I am bearish for the week. I might just hunt for some bearish setup, and yeah, bearish setup. Then my drawn liquidity on the week would be here. So yeah, so this down close, consecutive down close candle, the body of this candle, which is the order block, that is where my drawn liquidity will be. So if you look at it very well, if you understand price action, you understand that it makes so much sense for price to trade into. This is currency. It doesn't just currency trade to the bodies of candles. It doesn't it's indices. It might just come to the weeks, touch the week or 50% of this week and trade up, but I'll trust it to come to the opening price. I want to see price. We still have a lot of move to this area. I think we have about from the current price, to this place, we have 184 pips for price to get to that place. So we still have so much movement to the downside. So intraday I usually hunt for just 20 pips, 30 pips on average in a day. So we have 184 pips to capitalize on reaching on that drawn liquidity. So that is it for it. I would have done an analysis on the DXY, which I will just walk you guys through it a bit. So DXY is actually doing the same thing. I think the reason why DXY, this is what I was also expecting on DXY. This is what I was expecting on DXY. So after we saw that rejection there, this is a weekly time frame actually. So this is opening price. So if you look at this candle that created this order block on DXY, you see this candle didn't have any wick. It's the devil's mark. So this devil's mark, I think price came back and trade exactly at the high to balance price. It's kind of, they came back to balance, to rebalance. Is it rebalance or balance? I don't know, but I know price can always respect any candle without wick. That usually respect candlesticks without wicks. So if you see, this makes a little sense. So we have, and you see this actually trade into this. These are levels 1 2 3. 3 candles was induced into this fair value gap and on into this order block. I am not interested in seeing price come down to this place anymore for now, at least for this week. This week I don't expect to see price trade back to this place again, unless something magical happen in the market, which means that obviously every moment in the market is unique. But for now, since we have seen this expansion to this level, and if price break this high, I think we'll be looking to see trade to this. I would like to see price trade to this high, this candles high. If at least this is the short-term drawn liquidity. It's not like we're not going down, we're going down, but the short-term drawn liquidity. Yeah, that's the high of this fair value gap here. This inefficiency, that's the high. So if you see, we didn't trade into that high before. So that's what I'm expecting to see price trade to, and make it trade to identify it as a draw liquidity. So that's where I want to see DXY trade to this week. I don't know how many points to draw liquidity, but even though we still have to keep an open eye. So it makes sense. but for now, it's just the opening of the week. We haven't really seen anything in prices, so I won't be rushing for anything. I'll just expect price to do. I just want to see price do whatever it wants to do. I will only come into the unique time, the best time I trade in the market, which is the New York session. Sometimes the London session, but I usually don't like trading the London session because I'm not confident around that environment. Because I believe price action for the day is still unfolding. So there are some price action there that I usually don't trust. There's more volatility during the New York session. So that is it for currency. I don't think there's much I can break down on that. So that's it. So I have Nasdaq. So if you see the way we opened that now, the Nasdaq we opened and gapped really. We had a huge gap to the downside, just like what happened the previous week. You see, this previous week, this Monday's open, which I targeted. We targeted that Monday open, although I didn't trade Nasdaq throughout the week. So the same thing. So this is an inversion favor gap I highlighted before, and I expect price to come into this area. Price was around, but when I saw this break of structure here, when I saw price displaced to the upside, broke the structure, trade above the opening price of 3 months, I saw how it closed above this swing high, and that was when I knew these two areas, this high resistance liquidity run was going to be taken, and this would be my short-term drawn liquidity. Just as I anticipated, price trade straight to that area, closed below the inversion fair value gap. The next day, the same thing. Next day, so none of these bodies of this candle closed outside this area. So the wicks did the damage. So the body is obviously telling the story. So if you see, the body obviously told the story, which is then after the next week we saw this gap down, leaving this inefficiency here and here. So I wasn't surprised to see price on Friday trade into that inefficiency, then reject. On Thursday, you went into the opening price of Monday, which is the opening price of the week, then reject, then open, do the same thing on Friday. We went all the way to the side, feel this inefficiency completely, then reject to the downside. Now what are we seeing? We see the same thing on this new week. So this is the opening of this week. So we still expected price to come. This 3 consecutive close candle, I hope to see price trade back to this level, at least feel this inefficiency. This inefficiency will be I want to look for the 50% of that inefficiency, which is above this area here. But I don't know how likely it's for it to come and trade into this place. But that is why you have to just be patient. Patience is the key to this trading business. So you have to be patient and wait to see how price trade into this inefficiency and see what it does in general. So for now, due to this gap, I see it shows that maybe we might likely go down for the month. I consider this. I always think power of 3. So why I think power of 3, I think we might be a little bit bearish to the downside, running for this, going into this inefficiency here, running this low, this inefficient, this sell side liquidity, and into this inefficiency here. Then I don't know, anything it wants to do is on it. So for now, I want to see us trade back into this opening gap, and maybe look for reasons of confirmation, maybe on the less lower time frame, like in intraday time frame, to look for reasons why we might be going down. So this price action here doesn't look to me like a bearish price action, at least for now, a short time bearish. So it will be very bearish for now. So these are high resistance liquidity run and into inflation fair value gap, then we rejected, we dropped, we displaced. This is considered displacement. We might be running, we will be going for, I am calling for these two levels. These lows, I want to anticipate price to take out these lows here. So these lows will be taken out, obviously. If it doesn't go out, that means I'm wrong. So why we displaced, after taking out this liquidity here, we displaced to the downside, which is the opening of last week, then which is this low. This low was a structure which was broken, and this down close candle is also a structure. I consider it a structure. So we see we trade back, we displaced to the downside. There's not much talking on this analysis on Nasdaq. So, but this is my trade review on Euro USD and Nasdaq. So we want to let's go to the economic calendar and see what we have there. So in the economic calendar, we see we have Mondays looking like a very interesting week. Obviously look like a very interesting week. So we have on Monday we have Red Food event, which is on 10 a.m. So I will filter out the high impact events and only on USD pairs. I don't trade any other assets, just the USD assets. So this is Monday. We have ISM manufacturing PMI. So we have just opening. So this it looks like a very interesting week. So it's NFP. Friday is NFP. So this is the first week of the month. So we have NFP on Friday. Yeah, quite interesting. Let's sit around and see what price the market has to offer us this week. So I'll catch you guys maybe on the next video. Thank you guys. Bye for now.